Hello everyone, I'm Yash Paliwal and welcome you all to my first YouTube video channel ohhopaisa. The main motto of this channel is to promote financial literacy, and I am going to take you through at the basics of Indian financial system at the beginning, and gradually will move to understand important financial concepts with related case studies. Let us start with the basics of Indian financial system. At the end of this video, you will be able to understand what is financial system, what is Indian financial system, components of Indian financial system, and features of Indian financial system. So first, what is financial system? A financial system is a set of institutions such as insurance companies, banks, non-banking financial companies, stock exchanges, regulatory authorities. What they do, they allow and permit exchange of funds between lenders, investors, and borrowers, where lenders and investors seek return on their investment, and parallelly borrowers fulfill their short-term and long-term financial need by taking money from the available resources and pay interest on that. By facilitating this process, financial system helps in creation of wealth in the economy by linking savings with investment. In this diagram, you can see that financial system consists of four components: financial institution, financial markets, financial instruments, and financial services. Let's look all these components one by one. Let's look at the first component of Indian financial system is financial institutions. So what all are the financial institutions? Financial institutions are the organization that engaged in the business of dealing with financial and monetary transactions such as accepting deposit, granting loans, investments, and currency exchanges. This also includes the regulatory institutions like SEBI and RBI, who governs the financial market to protect the interest of investors and the general public. In the diagram, you can see the examples of financial institutions like banking institutions, non-banking institutions, and regulatory bodies. Now comes to the financial markets. What all are the financial markets? Financial markets are the place where buyer and seller, lender and borrower meet. Thus, these markets are classified in two types in India, like unorganized market and organized market. Under the unorganized market, people like local money lenders involved in lending function, but the organized financial market, it is completely regulatory driven and helps in creation of wealth in the economy. These markets are classified in two types: money market and capital market. So what is the money market and capital market? Money market is the place where financial instruments with high liquidity and short-term maturity are being traded, and capital market is the place where the instrument which has less liquidity and long-term maturity are being traded. In relation with the financial markets, we'll understand the financial instruments. Under money market, promissory note, bills of exchange, commercial papers, treasury bill, all these instruments carry some monetary value, and all these has high liquidity and short-term maturity and are being traded in the money market. In capital market, equity share, preference share, debentures, bonds, and mutual funds. All these instruments also has some monetary value, and all are being traded for long-term maturity with less liquidity. Now comes to the financial services. Financial services are the economic services provided by the financial industry in the economy. Such services like commercial banking, investment banking, asset management, wealth management, personal finance, stock brokerage. One thing is common in all these services, that it is all related with your money. So that's all about the components of Indian financial system. Now we'll move to features of Indian financial system. The main feature of Indian financial system is that it plays a vital role in the economic development. By facilitating the flow of money and credit into the economy, it helps in the economic development. Second, it encourages both savings and investment. Thus, it facilitates the creation of wealth in the economy. IFS facilitate the process of capital formation in the economy by providing platforms to the business organization. IFS acting as a platform where all the market participants meets and share the risk. Thus, it helps in allocation of risk. It is highly regulatory driven by the regulatory authorities such as SEBI RBI, which aims to protect the interest of investor and ethical functioning of the Indian financial system. and it also helps implement the government policy to facilitate economic development. Such policies includes monetary policy and fiscal policies of the government. That's all about the Indian financial system. Hope you all have enjoyed and understand about the Indian financial system. Stay tuned for more such videos. Thank you for watching. If you like this video, do like and subscribe. Be happy, healthy and wealthy. Thank you.